Welcome to Bears in Exile. Today is Wednesday, December 14th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well, another decent down day for the market, and you know, I had totally lost faith about my call for 11,800. Because of all of this back here, it was just taking so darn long. And once you know it, today it was hit. Today it was breached. So it was a good call, and I lost patience with it, which normally I have pretty good patience, but sometimes it just fails. So kind of cool in a way, and kind of wow. I wish I had seen that come in a week and a half into the future, and not, just a few days into the future. So um, I'll just say cool nonetheless, but something I've got to work on. Beyond that, we are getting crossover in the short-term moving averages. Of course, we are below the major price consensus level for the current month. If we're able to get complete crossover and separation prior to entering the bar, we should put the hurt on the bar, which would, who knows, maybe even get to the other part of the call, which was down here at the bottom part of the big old green candle. Now, what else do we have? Well, down still on the CCI and the stochastics, fast getting into oversold. Almost at the bearish cross on the MACD, down to zero on the MACD histogram, although ticking up in the RSI and the 14-day RSI moving average. So, that 14-day RSI moving average, it's kind of interesting that it has turned up already. Either it's going to bomb out and do what it typically does not do, which is a wavy line. You can see a little bit of that back here where it comes all the way down, starts going back up, does a little bit of a wave, and then finishes its move to the top. Maybe it's going to repeat that here, but in the inverse of it, I should say. But I guess we're going to have to see. You would think that it would have at least a little bit of damage from the last 3 days, but yeah, it takes a lot to move it, and it is steadfastly pointing up. Intraday time frame, 60 minutes. What do we have? Well, we have positive divergence in the stochastics, the fast stochastic actually. 14-day RSI moving average is still ticking down. We don't have any divergence in the CCI or in the RSI, but we do have it in the MACD histogram. So there are some reasons that it should pop up. You can see that we have excessive separation and wobble in the short-term moving averages. It's another reason why there should be some sort of corrective move at some point. And we have reached the initial target, which was the halfway point of the big green candle from back here. SPX, nice red candle, came down, kissed the lower price consensus level today, slightly backed away from it, getting the cross of the middle Bollinger Band with the short-term moving averages, and this could easily turn into a double flatline, something to be on the watch for. And secondary is the same as the Dow, 14-day RSI moving average still pointing up. And the VIX crossed back over above the 200-day moving average, ended with an inverse hammer, and here's another reason why, or here is a reason why the bears maybe should be happy, which is the 14-day RSI moving average and the stochastics are getting pretty darn low. Yeah, they have further down that they could go, but nonetheless, should not be down here for too long, and it'll turn around and go up, and the bulls are in for some pain. So if we're going to have a Santa rally, which appears less and less likely each day, but I think there will be an attempt, it needs to do it soon, because very soon the VIX is going to turn around, and it's going to be really bad for the bulls. TNA, nice big down. We said in the daily running thread today we took a for fun trade. at $40 call for January, and so far we're slightly in the red, but we ended with a spinning top. We still have a bearish bar that will have to reform. It's lost a lot of its strength. But 14-day RSI moving average pointing up, stochastics down, CCI down, up on the RSI, almost a bearish cross on the histogram, and into the negative in the MACD histogram. What we're looking for here, at least in the very short term, is a higher low and then a re-challenge of the recent high, and perhaps even besting it, and then a possible failure time as 14-day gets to its top, probably meets up with the stochastics, and the VIX is ready to finally do its climb and put the market on into hurt mode. The only thing that could really mess all those plans up, in my opinion, of course, are the next QE, which they were hinting at today could be right around the corner, as Benny Boy is worried about the Euro banks. But if the Euro situation beats him to the punch and they start crapping out beforehand, then all bets are off, and definitely the recent lows will be tested. So kind of a race at this moment, and we don't know who's going to be the victor. UUP, very interesting. We said in last night's video we were outside the upper Bollinger Band and should have a downtick or a side move. That did not happen whatsoever. We have the entire body outside the upper Bollinger Band, which still makes me think should have a move down or a side tick to fix itself. Normally we only have a couple of days outside the Bollinger Band, and very typically when you have the entire candle outside of the Bollinger Band, you definitely have a snap back. Is this going to be the exception to the rule? Nobody knows, but I would say that it would be better odds that it needs to snap back in. News permitting, of course. To refute that, however, we still have the 14-day RSI moving average ticking up. It still has room to move before it gets overbought, suggesting that this could continue going to the upside. Stochastic still pointing up, CCI very high, downtick on the RSI, uptick on the histogram, uptick on the MACD. We have the bullish cross, so there are some mixed signals here. You can make a case in either direction, but this can definitely snap back inside and then continue its move up to finish out the movement of the indicators. FXE, very similar to UUP, we have a doji star completely outside the lower Bollinger Band, needs to snap back in. Stochastics very low. I mean, it's incredible how far the euro has fallen. Still have a little bit of room in the 14-day RSI moving average. Slight uptick in the CCI in massively oversold territory. Uptick on the RSI, downtick on the histogram, bearish cross, and downtick on the MACD. Very ugly. We should have some kind of a relief move very soon, but we have broken the recent lows by a very good clip. So the question is now, where does it stop? It bounces up, it retests the new bottom, the new floor, and then we see if that holds or not. So very, very interesting. GLD, massively ugly, breaking the previous floor decisively, way outside the lower Bollinger Band, breaking the 200-day moving average by gapping through it. Stochastics massively low, CCI massively low, 14-day RSI moving average getting very low, down on the RSI, down on the histogram, down on the MACD. I would assume that this is people liquidating gold to cover whatever positions they have. So fix bad money with good money. And wow, this really does need a snapback at some time really soon. Hopefully it'll be tomorrow, but regardless, at some point it really should retest the 200-day moving average. The question will be at the time, does it cross it? And last, SLV. Another spinning top outside the lower Bollinger Band. Short-term moving averages all pointing down. Middle Bollinger Band above the short-term moving averages. Way low on CCI, stochastics, and down on the histogram, MACD, RSI, 14-day RSI moving average. Note it has more room to move on the 14-day RSI moving average. Now, one thing that's different between this and gold and some of the other things, we have not beat the previous low yet. If that were to crack, then oof, ugly. But yeah, not much more to say. I would expect there to be a bounce. It looks like from the indicators the bounce is probably not going to last that long, so I'm hoping that it will bounce, sell into it, and reevaluate the situation dependent upon what the indicators say at that time. So as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.